Hello, neighbors. Welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, friends, it is Friday, finally Friday. I thought it was Friday all day yesterday, but alas, it is finally Friday. And we are in the wonderful world of money, learning about futures contracts, guys. That is right. It is a type of what? What is futures contracts? I don't know. I've heard the word many a times, but do I know what they are? No, I do not. So today we are going to give ourselves our first introduction to them, and we're going to use Investopedia like normal, my friends. And we're going to read this article by Adam Hayes called Futures Contract Definition, Types, Mechanics, and Uses in Trading. So we should get a pretty good understanding. Adam Hayes wrote this. It's the guy with the pop collar. Charles Potters, that's who reviewed it, and it was fact-checked by Skylar Clorin. Hey, look at her. She's got bangs. It's another girl. I like it when girls. Why are the girls the fact-checkers, though, and not the writers? Investopedia, why are the girls the fact-checkers, but not the writers? I want to know. Okay, so for today, I got my trusty Sherry's cup, guys. I don't know where this cup came from. Obviously, it came from Sherry's, but I think somebody had coffee at Sherry's, and then they just walked out with it, and then it ended up at my house. I don't know. I've had it for years. If you did this and you brought this Sherry's cup over to me, you let me know. TKL, I'm looking at you because you're notorious for carrying cups out of places in your pocket. That's right, guys. If you ever want to see somebody with a cup of liquor in their pocket walking out of a bar, you guys look for Wild TKLs. He'll do it. I don't know. He may have grown up, guys. That was when he was a young buck. Maybe I'm talking lies about him now, but back in the day, he probably had some coffee at Sherry's and stuck this in his pants pocket and walked right out with coffee in it. Don't ask me how he did it, guys, because he never spilt it either. He just put the cup in his pocket, front pocket, not back pocket, and walked out. You let me know if you can do that. It's kind of a talent. So I made espresso today, guys. A shot of espresso and milk and no caramel today. It's not a caramel cappuccino. It's just coffee and milk. So let us get into what is futures contracts, guys. What is a future contract? I don't know. Is it something from the future? Or is it something for the future? I guess we shall see. So, futures are derivative financial contracts that obligate parties to buy or sell an asset at a predetermined future date and price. So they're like options, guys. But options do not obligate you to buy the asset. It just tells you you can buy the asset. I'm getting a phone call from a number that always calls me every day at 5 a.m. I wonder who it is. Probably a bill collector. But anyway, futures, you're obligated to buy or sell at the price that this suggests or that this stated. But with an options, you have the opportunity to do it. You don't have to. So that is the difference between option and future. Options do not say obligate parties to buy or sell an asset. It says that they give you the option. That's why they're called options. They have an option. Ha, 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 ha. So what is a futures contract? A futures contract is, let me make sure we don't have nothing on. I am notorious for leaving stuff on, guys. This was yesterday's. If you could see, this was yesterday's. Guys, we have a whole folder. Did you guys see that folder? If you go to my channel, here's my channel, and you go to the playlist, guys, I have an entire playlist called Stock Market Learning, guys. You click on Stock Market Learning, and it's got 42 videos, guys. 42 of them. Here they are. See? This was yesterday's, the day before, every day all the way down. That's because I am learning to trade at 40, guys. I turned 40, and I decided that what I got to do is know about money. So every day, Monday through Friday, I am learning about the stock market. You can come and you can learn too. And then we can be stock market gurus together in about a year probably. I'm thinking it's like a lot to learn, guys. So we're spreading everything out. Right now, these are just our introductions, guys. We're reading information on each topic. So if you want, you can go back all the way to the beginning.
Hello, neighbors.
And learn what is the stock market, guys.
So,
and then go through each one. Each one is about anywhere from 30 minutes to an hour or so long. Not very long, Squealer D, and I'm back again. And they will help you learn. It is Thursday, how to trade on the stock market
all morning.
So go check those out. I was there weekend. And we are back to futures. So, 1 second, guys. My allergies act up in the morning. Sorry, guys. My doctor prescribed an inhaler to help with the allergies. It's making me feel so, I don't know, like I'm underwater sometimes. So, what is a futures contract? A futures contract is a legal agreement to buy or sell a particular commodity asset or security at a predetermined price at a specified time in the future. Futures contracts are standardized for quality and quantity to facilitate trading on a futures exchange. The buyer of what's a futures exchange? Can you do it on futures exchange is a marketplace where a diverse range of commodities, futures, index futures, and options on futures contracts are bought and sold. So, members, you got to become a member. You got to establish an account with a registered broker. Okay, now we know. So, the seller of the futures contract, the buyer of a futures contract is taking on the obligation to buy and receive the underlying asset when the futures contract expires. The seller of the futures contract is taking on the obligation to provide and deliver the underlying asset at the expiration date. So it's like anything else, but you're obligated to have it. So if you go and buy a house, when the date hits, you get the house, right? And then the seller, they have to give the house, right, for the money. So that's what this is. This is like an obligated buy. So the key takeaways of this article are going to be futures contracts are financial derivatives that oblige the buyer to purchase some underlying asset or the seller to sell that asset at a predetermined future price and date. And that might be good, guys. A predetermined future price and date might be great because if you determine the price in the future, let's pretend, for instance, guys, let's bop over here to Apple. Apple's nice. We'll look at Apple. And I'm going to show you guys something. Let's look at let's look at the 1 month. Okay. Come on. Get more manageable. Okay. I don't know. It's not manageable. It's unmanageable. So here's for the month, right? So let us pretend. This is by the month. Sorry, this is not the month. This is bi-monthly. So let's pretend that you buy here, right, at $118. And you say that you want to do it for $118, right? But the futures contract date is way out here, 3 months or 4 months away, right? And it's at $152. If you put that you wanted to buy it at $118 in the future and they sold it to you at that, they would be obligated to sell it to you at that lower price. So you would win out by buying that. And vice versa. If you sold it way up here and said, I want $175 on January 3rd, and on January 3rd it was down to $126, you might sell it for more than it's really worth, and they would have to be obligated to pay for that. So a futures contract might make you more money or save you money because of the future price and date. So a futures contract that's just my estimation of what this means, guys. We're going to keep reading and we're going to learn more. So stay tuned, my friends. A futures contract allows an investor to speculate on the direction of a security, commodity, or financial instrument, either long or short, using leverage. Futures are often used to hedge the price movement of an underlying asset to help prevent losses from unfavorable price changes. There are tradable future contracts for almost any commodity imaginable, such as grain, livestock, energy, currencies, and even securities. In the United States, future contracts are regulated by the Commodity Futures Trading Commission, the CFTC. And then there's a little video here. You can go click it and watch it all by yourself, like a big girl or a big boy. Understanding futures contract. Futures are derivative financial contracts that obligate the parties to transact an asset at a predetermined future date and price. Here, the buyer must purchase or the seller must sell the underlying asset at the set price, regardless of the current market price at the expiration date. So that's like I was saying, guys, if it's a set price that's higher, you might save or lose money based on that future. That is why people say futures are more risky than just buying stocks, because a stock, you can choose to sell it at market price or hold on to it or sell it before it drops down. But this one, you are, what did it say? Obligated to trade at that price if you make that agreement. So underlying assets include physical commodities or other financial instruments. Futures contracts detail the quantity of the underlying asset and are standardized to facilitate trading on a futures exchange. Futures can be used for hedging or trade speculation. So if you want to hedge a bet that it's going to go a different way or speculate on something, maybe you have, I know they use that for options where you actually have the stock, but you use the option as kind of a insurance. So if you own the stock and it does go down, you have kind of insurance. You're going to get money in a different way. So it's okay. You can hold on to those. So this might be like that. We're going to read and keep finding out. Stay tuned, guys, because we're still going to go on to Investopedia Stock Simulator and check out some stocks after this. And the news as usual. You know I got to finish my coffee before it gets cold. So, futures contract and futures refer to the same thing. So if somebody says, man, I got to buy a futures contract, or they just say, I invest in futures, they're talking about the same thing. For example, you might hear somebody say they bought oil futures, which means the same thing as an oil future contract. When someone says futures contract, they're typically referring to a specific type of futures, such as oil, gold, bonds, or S&P 500 index futures. Futures contracts are also one of the most direct ways to invest in oil. The term futures is more general and is often used to refer to the whole market, such as they're a futures trader. Future contracts are standardized, unlike forward contracts. Forwards are similar types of agreements that lock in a future price in the present, but forwards are traded over the counter. And we just learned what over the counter was yesterday, guys. If you missed that video, go check it out. Over the counter is interesting. And have customizable terms that are arrived at between the counterparties. Okay, so they have customizable terms. Okay, so a forward is like a future, but they have customizable terms and they're over the counter. Futures contracts, on the other hand, will each have the same term regardless of who is the counterparty. So no customizable terms, and they're not sold OTC, guys. Jump on over and check out our video yesterday from OTC. We checked out this, which is the process of trading securities via a broker-dealer network, guys. It's not on the New York Stock Exchange. It's a broker-dealer network. So you buy kind of like at a yard sale from a person. So, application of a futures contract. Katsan, hello neighbor. Welcome to the chat, my friend. I hope you are having a great day. That is a cute little cat. A cat in a box. Sometimes that's how I feel, like a little cat in a box. So, futures contracts are used by two categories or market participants, hedgers and speculators. Hedgers. Producers or purchasers of an underlying asset hedge or guarantee the price producers or purchasers of an underlying asset hedge or guarantee the price at which the commodity is sold or purchased. They use futures contracts to ensure that they have a buyer and a satisfactory price, hedging against any changes in the market. So this is like those people that I said they think that the market's not going to change, so they're hedging against it, hedging against the change in the market. An oil producer needs to sell its oil. They may use futures contracts. This stream is going great, my friend. It usually is. We usually just fly through money in the morning, and this is a great way, just hearing things. Sometimes you hear it a bunch of times and you learn it. I figure if we come here and every day we talk about money, it will inevitably be impossible for us to not know about money. The more we learn every day, sometimes we will get people in here that know more than us, and they will share their knowledge. And then every day I will share a little bit of knowledge, and eventually all of our minds will be filled up with money, guys. And if your mind is full of money, guess what comes next? Your pockets. That's right. If you can teach your mind to make money, your mind will teach your pockets to make money. That's right. We are here to learn to make money work for us, guys. Instead of always working for money, we need to make money work. And how does money work? It works on the stock market. So, learning is always good, Kat. Saying always. If you don't learn, you die. Seriously. Think about it. If you are in a situation where things are dangerous, if you don't learn those dangers, you are going to die. If you work in a scary, dangerous plant where things are moving all over your head and you don't duck down and you don't learn where those are, you're probably going to get whacked. So, learning is a necessity all of your life. Did you guys know that there are people that constantly learn? We have our doctors, and they have a responsibility to keep learning. They have something called CEs, which are continuing education. And they actually have to get continuing education credits while they work, which means doctors are always learning, guys. They're always taking classes. They're renewing their bloodborne pathogens and other things like that. They are always learning. So if a doctor is always learning to take care of us, then you should always be learning to take care of yourself. That's just what it is. Sometimes people think that they grow up and they're done learning. I say, balderdash. You are never done learning. Ever, ever, ever. There's always something to learn. Always. I stand on that hill and I will die on it. If you are not learning, you are dying. That is my definition. So, hedgers hedge against the market. So, if an oil producer needs to sell its oil, they may use future contracts to lock in a price that they will sell at, and then deliver the oil to the buyer when the future contracts expire. Similarly, a manufacturing company may need oil for making widgets. Since they like to plan ahead and always have oil coming in each month, they may too use futures contracts. This way, they know in advance the price they'll pay for oil, the futures contract price, and they know they will be taking delivery of the oil once the contract expires. Wow, what a way to buy oil, huh, with the futures contract. That way you know how much you pay. But what happens if you plan ahead like that and you buy, say, the oil for $52 a barrel, but the country has had a steep decline in its need for oil, and oil isn't $52 a barrel anymore. Let's pretend the oil went down to $18 a barrel. Now you're paying almost $30-something extra for those barrels because you had a futures contract. So therefore, you have to know, like this said, you have to know how to hedge against any changes in the market, because it would not be smart to plan ahead and end up paying for more, right? So speculators, since those are hedgers, they may buy ahead of time and hedge against the market. Speculators, and you guys, we also did we introduced you to what speculators are in the market too, so you can go back and look at that in the playlist. Since many commodity prices, that little dabber is so cute, the little guy dabbing. So, since many commodity prices tend to move in predictable patterns, it's possible to make a profit by trading futures, even if one does not have a direct interest in the underlying commodity. Traders and fund managers use futures to bet on the price of an underlying asset. For example, a trader may buy grain futures if they expect the price of grain to increase before the delivery date. Any unexpected changes to the weather or growing conditions may cause the futures price to rise or drop. So, that means like grain, guys, you might know how much grain is. You expect the price of grain to be the same, right? But what happens if there are storms where the grain is grown and then all of the grain goes bad, so the prices drop, and now you're paying more than what everybody else paid because they're going to pay the dropped prices after the storm, and you're going to pay the prices that were before the storm. So you always have to be careful on your speculations and your hedging because you may be wrong. And that, guys, is good risk management. And we talk about risk management almost every single time. And your emotions. If you are emotional and you do not have good risk management, you will make these mistakes. You will speculate and hedge on things that you shouldn't be hedging on because of your emotions. So like I told you, while we're learning this, you are learning to get control of your emotions. Money cannot make you emotional. Not if you're trading, not if you're trying to make money off of money. Money cannot make you money if you're worried about it. Just like your husband is not going to trust you if you're worried every time he leaves the house that he's going to cheat, right? You don't do that. So when you come in here and you think about money, you don't worry about the money cheating on you. You have no emotion towards that money. That money is not your husband. He has that money has no contact with you. It's literally just money that sits in banks. It's not your husband, so you do not have to worry about it. That's how you have to think about it. Or otherwise, you're going to speculate and hedge wrong because you're going to be worried about that money like you would be worried about your husband out there. Global change the marketing. Yes, the market's changing globally so fast because things that we used to do in America, they do in other countries still. Or things we don't do anymore, or things we never did, they do. So the global economy has changed everything in the world. Everything. Unless that's not what you meant. But let's talk about the types of futures. Future contracts can be used to set prices on any type of commodity or asset, so long as there's a sufficiently large market for it. Some of the most frequently traded types of futures are outlined below. So, agricultural futures. These were the original futures contracts available at markets like the Chicago Mercantile Exchange. In addition to grain futures, there are also tradable futures contracts in fibers such as cotton, lumber, milk, coffee, sugar, and even livestock. Energy futures. These provide exposures to the most common fuels and energy products, such as crude oil and natural gas. Metal futures. These contracts trade in industrial metals, such as gold, steel, and copper. Currency futures. These contracts provide exposure to changes in exchange rates and interest rates of different national currencies. Financial futures. Contracts that trade in the future value of a security or index. For example, there are futures for the S&P 500 and NASDAQ indexes. There are also futures for debt products, such as treasury bonds. So, futures contract versus a forwards contract. A futures contract is similar to a forwards contract, where a buyer and seller agree to a set price and quantity of a product for delivery at a later date. Both types of contracts can be used for speculation as well as hedging. However, there are also important differences. While a futures contract is a standardized agreement that can be traded on the exchange, a forward contract is simply a private agreement between a buyer and a seller. While it is possible to trade forwards on OTC markets, they are less regulated and less accessible to retail investors. This means there are also more opportunities to customize a forward agreement according to the buyer's and seller's needs. So what they're saying, guys, is yesterday we learned about over-the-counter markets where it's between a buyer and a seller, two people. There's no market. It's not a big exchange, guys. And that means that it's easier to get ripped off, right? if you buy your car from a big giant lot, you know most likely it's not going to be a lemon, because that big giant lot, they don't want to put out a bunch of lemon cars and look like bad dealers, right? So it's easier to buy a car from a big lot and know you're not going to get ripped off. If you buy a car from a little lot that only sells maybe 3 cars a month, they may rip you off. They may sell lemons, guys. They may buy cars from the auction and fix them up and then tell you that they're good cars when really the entire car was smashed to bits 2 months ago. But they sell it to you anyway and say it was a good car, and then you're driving it down the road and the wheel falls off. That's more likely from a small one person than from a large person, because the large person has more to risk. They have a bigger reputation to lose, right? So it's the same thing here. These the over-the-counter markets, they're between a man or a person and a person, a buyer and a seller. If you're talking about the actual future, the future is sold on an exchange like the New York Stock Exchange, which is kind of like a Honda dealer, guys. It's like the biggest dealer. So that all plays into risk management. It's fine to buy something at a yard sale from a private dealer, but that doesn't mean you're not going to get ripped off. So you have to remember with over-the-counter markets that it is more riskier. But we have also learned, guys, what does risky mean? If something is more risky, you usually make more money. So that all plays into risk management, and you have to know how much you can risk. It's all about you guys and your emotions. Remember, I told you, if it's going to make you cry all day for you to lose money, perhaps you don't play the market and lose money, guys. And playing the market, you could be playing the market without playing the market. If you go and waste your money on things for your house, like let's say you like to redecorate your house every day, you're still playing the market. You're just playing it in a different way. You get what I mean? If you go to Hobby Lobby, guys, Hobby Lobby is a store, right? It's a big store. So it's like the stock market. If you go in there and you invest in all their little crappy stuff on the shelves, you're buying penny stocks, guys, and you're putting those penny stocks in your house. You're using the money, you're putting in your house. Those things might cause cancer. They might leach out chemicals. They're made in China. A lot of them are low priced. You might get cancer from them. They might break easily. You're hedging your bets on Hobby Lobby items, right? That's like the stock market. You have no problem going into Hobby Lobby and buying something that may break. And you don't feel any way about it. You don't cry when your vase breaks. You go and buy a new vase. So why would you cry when you lose $100 on the stock market? You shouldn't, but people do, because money means something to them, and items like stuff, it doesn't mean anything to them, but they waste their money on that item. So I don't get it, guys. I don't get it. Stop wasting money and start saving money until you can invest it in the stock market. And if you lose it, you would have lost it at Hobby Lobby anyway with your broken stuff. So, or let's say it doesn't break, guys. How often do you change your house? How often do people put new vases up or new things like that? People waste money all the time, but they can't waste money on the stock market investing. I would rather waste $100 trying to make my money work for me than waste $100 at Hobby Lobby. And how many people in the last week have wasted $100 at Hobby Lobby in the United States? I bet we could learn. How much money did Hobby Lobby make? How much did Hobby Lobby make in a week? Oh, $9 an hour. Oh my gosh. Hobby Lobby only makes $9 an hour? Oh boy. I would not work at Hobby Lobby. My gosh. I didn't want to know how much they make. I want to know how much the store made. Oh. Man. Owns a chain of arts and crafts stores with a volume of over 5 billion in 2018. Oh my gosh. How much did it make in 2022? He spent $500 million to open the Museum of the Bible. This is where they had all those stolen artifacts. Hobby Lobby, man, they pay their people $9 an hour on average. Oh, in 2023 it says they moved it up to $18.50. That's because it was $9. Oh, this is on Indeed. Indeed ain't wrong. Man. Retail assistant manager, 55? No way. You be an assistant manager and run that whole entire Hobby Lobby for $55,000 when you can go drive a truck around for like $70,000? There's no way. There's no way I am going to go sit in a store and deal with all of those customers and all of those employees for $55,000 a year. There's no way. $55,000 a year, you guys? Hoy vey. I ain't doing it. No way, Hobby Lobby. So, imagine an oil producer plans to produce 1 million barrels of oil over the next year. It will be ready for delivery in 12 months. Assume the current price is $75 per barrel. The producer could produce the oil and then sell it at the current market prices 1 year from today. Given the volatility of oil prices, the market price at the time could be very different from the current price. If the oil producer thinks oil will be higher in 1 year, they may opt not to lock in a price now. But if they think $75 is a good price, they could lock in a guaranteed sell price by entering into a futures contract. So let's say they are going to make 1 million barrels, right? And right now oil is $75 a barrel. But 12 months from now, oil might only be worth $50 a barrel. So it would be smart to lock in the $75 a barrel price right now. But it would not be smart for that buyer. That's why we have to be smart, guys. Because every day we have people making these types of trades. And you have to be on the right side of the trade. Otherwise, you lose money. So that is why we are learning. Given the volatility of oil prices, the market price at that time could be very different than the current price. So they may change it, guys, right? And get a futures contract if it's going to be lower. A mathematical model is used to price futures, which takes into account the current spot price, the risk-free rate of return, time to maturity, storage costs, dividends, dividend yields, and convenience yields. Assume that 1 year oil futures contracts are priced at $78 per barrel. By entering into this contract, in 1 year, the producer is obligated to deliver 1 million barrels of oil and is guaranteed to receive $78 million. The $78 price per barrel is received regardless of where spot market prices are at the time. Contracts are standardized. For example, one oil contract on the Chicago Mercantile Exchange is for 1,000 barrels of oil. Therefore, if someone wanted to lock in a price, selling or buying, on 100,000 barrels of oil, they would need to buy or sell 100 contracts. To lock in a price on 1 million barrels of oil, they would need to buy or sell 1,000 contracts. The future markets are regulated by the Commodity Futures Trading Commission, the CFTC. The CFTC is a federal agency created by Congress in 1974 to ensure the integrity of futures market pricing, including preventing abusive trading practices, fraud, and regulating brokerage firms engaged in futures trading. So they made this commission just like the Buttonwood Agreement, guys, to make sure that nobody is committing fraud, because you know what? No rich person wants you in there committing fraud on their money in their terms, ever. And that is a lot of the reason why I am okay. You guys, as long as you have the information you need in your brain, okay, and you understand every rule, you are up there with the rich people. You know what they know. Just because they have a little bit more money to work with does not put you out of the game. And I understand that there are AIs and you're not as smart as AIs. But you want to know what AIs are not, guys? They're not clever. They don't think like humans, okay? So this fraud came because humans are clever. Really. Abusive trading practices came because people were clever. They saw ways around the original way to make money. And computers are not that. So get more clever and you can still beat the computers, guys. So trading futures contracts. Retail traders and portfolio managers are not interested in delivering or receiving the underlying asset, right? You guys, if you bought 100 100 barrels of oil. Where would you put 100 barrels of oil if they delivered them? So, a retail trader has little need to receive 1,000 barrels of oil, but they may be interested in capturing a profit on the price moves of oil. Futures contracts can be traded purely for profit as long as the trade is closed before expiration. Many futures contracts expire on the third Friday of the month, but contracts do vary, so check the contract specifications of any and all contracts before trading them. For example, if it's January and April contracts are trading at $55, if a trader believes that the price of oil will rise before the contract expires in April, they could buy the contract at $55. This gives them control of 1,000 barrels of oil. They're not required to pay $55,000, which is 55 times the 1,000 barrels for this privilege, though. Rather, the broker only requires an initial margin payment, typically of a few $1,000s for each contract. The profit or loss of the position fluctuates in the account as the price of the futures contract moves. If the loss gets too big, the broker will ask the trader to deposit more money to cover the loss. This is called maintenance margin. And remember, we learned about what a margin call is when they tell you guys, hey, your account's too low. The final profit or loss of the trade is realized when the trade is closed. In this case, if the buyer sells the contract at $60, they make $5,000, which is the $60 minus the 55 times 1,000 contracts that he had. Alternatively, if the price drops to 50 and they close out the position there, they lose $5,000. So there's a video you guys could watch. Why is it called a futures contract? A future contract gets its name from the fact that the buyer and seller of the contract are agreeing to pay a price today for some asset or security that is to be delivered in the future. Are futures and forwards the same thing? No, guys. Remember, forwards, you're not obligated. Futures, you're obligated, I think. No, forwards are over the counter. These are two types of derivatives, contract function. These two types of derivatives, contract, function in much the same way. But the main difference is that futures are exchange traded, so they're traded on the exchange, and have standardized contract specifications. These exchanges are highly regulated and provide transparent contract and pricing data. Forwards, in contrast, trade over the counter with terms and contract specifications customized by two parties involved. So these are always going to have the same data, and forwards are going to have customizable data. So, what happens if a futures contract is held until it expires? Do they bring you 1,000 barrels of oil and drop them off on your front porch? Unless the contract position is closed out prior to its expiration, the short is obligated to make delivery to the long, who is obligated to take it. Depending on the contract, the values exchange can be settled in cash. Most often, the trader will simply pay or receive a cash settlement depending on whether the underlying asset increased or decreased during the investment holding period. In some cases, however, futures contracts will require physical delivery. In this scenario, the investor holding the contract upon expiration would be responsible for storing the goods and would need to cover costs for material handling, physical storage, and insurance. Jeebus. Where would you store 1,000 barrels of oil? At their facility and pay them? Who uses futures contracts? Hold on one second, guys. My throat is dry. So, speculators can use futures contracts to bet on the future price of some asset or security. Hedgers use futures to lock in a price today to reduce market uncertainty between now and the time that good is that. That wasn't me, guys. That's their writing. Hedgers use futures to lock in a price today to reduce market uncertainty between now and the time that goods are to be delivered or received. I don't like how they wrote that. Arbitragers. An arbitrager is a type of investor who attempts to profit from market inefficiencies. That's like arbitrage on the computer, guys, where you go and you buy things on Amazon or Home Depot and then you resell them on eBay for a little bit more and you arbitrage them. You take advantage of the fact that the market has insufficiencies. There are insufficient items on different sites available to different people, and you make them available. That's arbitrage. So you could do it with investing. Of course you can. So arbitrageurs trade futures contracts in or across related markets, taking advantage of theoretical mispricings that may exist temporarily. So for instance, if Amazon has a book and it is priced at $2, but eBay is selling the same book for $17, you could buy them on Amazon and have them shipped directly to the people on eBay who are paying $17 and make $15 a book. Wham, bam, thank you, ma'am, you are an arbitrager. So, how can I trade futures? Depending on your broker and your account status with that broker, you may be eligible to trade futures, and you may not be eligible to trade futures. You will require a margin account and be approved to do so. Qualified traders in the U.S. will often have the ability to trade futures on different exchanges, such as the Chicago Mercantile Exchange, CME, ICE Futures, the Intercontinental Exchange, and CBOE Futures Exchange, SFE. The bottom line, futures contracts play an important role in the smooth operations of commodities market by allowing buyers and sellers to lock in prices in advance. They allow farmers, miners, manufacturers, and other market participants to work without having to worry about daily changes in the market. Perfect, wonderful futures, guys. And forwards are the same thing, but they're over the counter and they have different data. It's between two people. Futures, always the same, right? Perfect. Okay, Hobby Lobby, goodbye. Let's see. What's in the news today, guys? That was an interesting article. What can we get into in the news? Stocks jump after jobs report tops expectations. So the economy added more jobs, guys, while the unemployment rate ticked up. Why do you think that is? Why do you think we added more jobs, but more people are unemployed? The May job report released Friday showed the U.S. economy remains strong with more than... Oh, that's why. Because if they didn't create more jobs, then they couldn't say that the U.S. economy remains strong. And they're still really trying to force us to believe that we're not in a recession. The U.S. economy added 339,000 non-farm payroll jobs last month. Yeah. Then why did unemployment tick up? They tell us it's because nobody wants to work. But the real reason, guys, I want to tell you, remember, break America's little heart right now. It's not that people don't want to work. It's that people don't want to work for slave rates, guys. They made 339,000 jobs. Out of those 339,000 jobs, how many of them paid a fair rate? Literally. Let us know, U.S. economy. You put these reports out, and you never put out the report of how many, they say non-farm payroll jobs, right? But what does that mean, guys? How much do they pay? How many hours are they? Is it a full-time job? Like, the unemployment rate is staying up high, guys, because these are not real jobs. How many people have up jobs like where they're hiring because they got PPE loans and that's their requirement? In order to get a PPE loan and not have to pay it back, you have to be hiring. So how many of these jobs are simply hiring to not have to pay back their PPE loan? That's what I want to know, because I know people looking for jobs and they go into places that say hiring, and guess what? They're not really doing, guys. Hiring. And then when they do hire, guess what they're doing? They're not paying anything. They want you to work 12 hours a day and not make enough to pay your rent. If rent is $1,800 and you're only bringing $2,000 home a month, how are you going to live? You're going to rent that $1,800 a month house and live off of $200 for food, gas, and everything else you need? What about electricity? Electricity in the Pacific Northwest right now is higher than it has ever been. People in apartments are paying hundreds of dollars a month for electricity. If you live in an apartment and you pay over $100 a month, I say they're ripping you off in electricity. And that's what's happening in the Pacific Northwest. And I'm sure it's happening all over the United States where income levels are different. So if that is the truth, why is our unemployment rate still up? I'll tell you why. Because leisure and hospitality added 48,000 jobs, and food services and drinking places, guess what, guys? They don't pay enough. 48,000 jobs that don't pay enough. Healthcare. You're going to go work in healthcare? Let's look up healthcare, guys. Watch this. Indeed. No, not Hobby Lobby. I don't even know how to use Indeed. Just do healthcare. No results found. My gosh. There ain't no healthcare jobs. Where's medical? I don't even see medical. Where's medical? Maybe Indeed don't do medical. Womp, womp, womp. I didn't see it at all. I didn't see it. Do they not do like nursing and stuff? Do you have to go to a different site for nursing? Okay, well, that's crazy. A retail sales associate, $16 an hour. Cashier, $13 an hour. What are you going to do with $13 an hour? I know a lot of people make $13 an hour, but $13 an hour times 40 hours a week is only $520 a week. That means you only make $27,000 a year. Wow. $13 an hour, guys. $13 an hour times 40 hours a week is $520. After taxes, if they take 40% out of your taxes, it's $200. You're going to make $300 a paycheck. That means about $16,000 a year. $16,000 a year and you work at Hobby Lobby. That's pathetic. Even if you have kids and you get like income tax return, let's say you get $5,000 back for income tax return, that puts you back up to about $25,000 a year. That's ridiculous. Hobby Lobby, how much did Hobby Lobby make? How much did Hobby Lobby make last year? $5 billion annually. So, how much is 30K of 5 billion? Give us the answer. So 30,000 is what percent of 5 billion? 5 billion is 1, 2, 3, 1, 2, 3, 1, 2, 3. Where's the answer? I don't want the step by step. I just want the answer. Oh, look at this, guys. 0.0006% of 5 billion. 0.0006%. Not even 0.0. Not even 0.00. 3 zeros, guys. So they pay one of their workers that much percent to be a cashier. Yeah. Well, guess what? What did the CEO get? Hobby Lobby CEO pay 2022. So, the average Hobby Lobby executive compensation is $238,000 a year. That's the median. That's the average, guys. $115 an hour. night. What does this dude do? The most compensated executive makes $700,000 annually. Holy heck. $700,000. So 30,000 is what percent of 1, 2, 3, 4, 5, 6. Calculate. He makes 4.3% of what the CEO makes. And do you think, now that we figured that out, guys, do you think that this cashier does 4% of what this exec does every day? Do you think that the work that this person does is only 4% of the work that this person does? I bet it's not. I bet it's not. Hobby Lobby, I wouldn't work there. I'm sorry if you work there. I'm sorry if I'm talking bad about it and you do work there and it's not your fault. It's Hobby Lobby's fault. They made that Bible. They spent all that money, $500 something million to make that Bible thing, and they had stole the items. Like, get out of here, you guys. Lululemon surges. I don't know, man. I feel like Lululemon has good clothes, but then bad clothes. Like, some of them fit perfectly and they're so comfortable, and then some of them are tight and the material is weird, like they're fake or something. I'm not saying they are fake. I'm just saying that they're inconsistent. I don't like all of Lululemon's stuff. Some of them's that soft material, and then some of it is not that soft material, and then you can't tell the difference between the two online. How do you know? You don't know until you get them, and they cost $120 each. You're going to pay $120 each, and you don't even know what type of material it is. No thank you, Lululemon. No thank you. Is the jobs report useless? Yeah. Yeah, it is. What to expect from Apple's big event? I bet you Apple goes up today. Let me see. Apple going up. What's their big event today? Apple will host its WWDC What Would Donna Care event on June 5th, and we're expected a slew of announcements, including its AR/VR headset. The rise of the robots. Hey, New York Police Department signs a new deal. They got robots. I want to go to New York now just to see the robots. Look at these robots. Yep, they're going to walk around New York. They're going to hand out tickets for people that spit on the ground. I'm lying, guys. I'm just joking. What are they going to do? Are they just going to give directions? What are these guys going to do? Night scope. Oh, no. What do the robots do? Oh, huge market in dire need of crime prevention. Okay, we know that. But what are they going to do? They're just going to walk around? I don't know what they're going to do. Oh, I thought it said it was stacked with industry rockets. I was like, yeah, that's what they're going to do. They're going to shoot rockets at people. Look at it. It's so funny looking. How's it going to get around? What if people beat it up? You guys, there was that thing. Hold on. What was that? Bot around the world. America destroys it. There was a bot around the world. Hitchhiking robot destroyed in Philly, guys. They did this. They had this bot and it went everywhere. And then they destroyed it. A hitchhiking robot that successfully traveled around Germany, Canada, and the Netherlands was destroyed Saturday in Philadelphia just a few weeks into its U.S. journey. Sometimes bad things happen to good robots, the Canadian research team that created HitchBot said in a statement. The team received an image of the destroyed robot Saturday, but did not know who vandalized it. The robot's battery is dead, and the team cannot locate it. The robot, which wore yellow wellies and had San Francisco or bust written across its head, was the size of a small child. It had a GPS tracker, could carry a limited conversation, and took a photo every 20 minutes. You could track its travels on the HitchBot website and on social media. Look at it. It has wellies on. Oh, It started out in the U.S. on July 17th and saw sites in Boston, New York before meeting its untimely end. Here's a look at how far it traveled in the U.S. This is it, guys. The United States, it went all over Germany. Yeah, it went all over Germany. It was fine. It went all over the Netherlands, and it was fine. It went all over everywhere, and it was fine. And then it came to America, and it made it this far. And then it died. We killed it, guys. We killed the hitchhiking robot, and that is what I feel like is going to happen to these robots right here. I do. I feel like in New York, bad hombres are going to kill these bots. They're going to kill them down dead. I wonder what's going to happen if you kill a cop bot. Like, if you kill a cop bot, do you get charged with killing a cop? Like a dog? Like, I know if you kill a cop dog, you could get charged with killing a cop. But if you get charged with killing a cop robot, do you get charged with killing a cop? I mean, it's more expensive than the dog. How much is the dog versus how much is the cop robot? I think the cop robot's more expensive. Can Apple save the metaverse? No. I don't even know what the metaverse is. Why would you want to go in there and pretend to be these people when you could just go play a video game? Overhaul stores. I don't like the Apple store. It's a place of anxiety for me. Go in there and there's so many people just milling about. There's no lines. There's nothing. You don't know who is who. The people that work there look like the people that go there. The people that go there, they look so comfortable that you think they work there. I don't know. When I went there to go get our Apple Pencil fixed, I was like uncomfortable. Too many people all in one spot doing all the same things. I didn't know it. They were milling about. Elon Musk praises quality of made in China Teslas. Oh, now he's making cars in China? I thought he was making them in Texas. I thought he made his cars in Texas. CEO Musk is back in America after a 2-day trip to China, his first since the onset of the COVID-19 pandemic. The billionaire entrepreneur made a pit stop at Giga Shanghai, part of his tour, and delivered a late-night speech praising his Chinese staff. Oh, I guess he does make them over there. I don't know. I thought Tesla was made in America. I thought that was part of its, like, swag. I didn't know that. Teslas are not made in America. Congratulations to Giga Shanghai and Tesla China SDS. I don't know. I don't like that. Every time I read something about Elon Musk, I like him less. I don't know. K-pop giant hype to raise about $300 million for U.S. deals. I don't know. This guy. Oh, I wish I could inherit millions from my famous father. Must make life really easy, huh? Elon Musk flags sophisticated attack against Apple's iPhones. He's probably going to have a cell phone next, guys. Watch. He's going to have the Tesla iPhone, or the Tesla phone. In challenge to Meta, Apple expected to unveil mixed reality headset. Wow. Blend video of the outside world with the virtual one. Apple plans to add at least 3 more flagship stores in India. Apple nears all-time high. Man, Apple's on a trail today, huh? Apple, everything Apple. You should lower your expectations for its headset, though. You should probably lower your expectations for anything Apple. For anything, guys. Things are not getting better. Things are getting worse. Cash stored on payment apps may not be as safe as you think. Don't store money, guys, on payment apps. Don't store money in your checking account. We are learning from money talk that you should not be storing your money in a place that doesn't make you money, guys. Okay? There are places to store your money that makes you money. Google it. Find a place, even if it's just a savings account that has a bigger interest rate. You find that, okay? So, let's pop over here and look at our stocks that we have on our... This is our Investopedia stock simulator, guys, and it allows you to trade your stocks Here's our portfolio. This is what we have. We have one Apple stock. It's went up $8 since we bought it, 67 cents today. We have 10 Anheuser-Busch stocks. They cost us $54. No, they cost us $56. They've went down $22 since we've had them, $7 today. Fisker, we own 5 of them. It's went up $3 since we've owned it, 45 cents today. And then we bought some of this Oxy, which is what Berkshire Hathaway invests in, and it has went up $18, $14 today, guys, just today. Let's go check out Oxy and see what's up. Look at it. It's up 142, 2.44% today. So here is the ticker. Well, I wonder what this was. What was this? March 20. Oh, in the 2020, everything collapsed then. If only you had your money in here and you didn't know anything about the coronavirus. You know who did know about the coronavirus, guys? Our government. And you know who did sell out of this type of stuff? Our government workers. You know who didn't? You, the normal people, everyday people that work hard for their money. They don't sit around in a chamber of the government talking about making more money. So just remember that when you think about our government, that they made money when you were losing money. Lots of it. Oh, no. Rivian may lose NASDAQ spot. Rivian. This is the other electric car company. What do they have? $14. You think they can compete with old Elon? They just went down, 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 huh? What is their news? What is the news on Rivian? Because Rivian is not looking to. They're all going to catch up, though. You know, that's the thing. That's to buy it. What symbol is EAT? Brinker International. What's their Brinker International? What is Brinker International? I don't know what Brinker International is. Where's the information? I can't look up information about it on here. Let's go into here and look it up. EAT. See what EAT is. So we go into ours right here, guys, and you can do research and you can look it up. EAT. Brinker International. What is it? You can go to more info and it will tell you. Brinker International engages in owning, developing, and franchising Chili's, Grill, and Bar, Maggiano's Little Italy restaurant brands. Oh, it's Chili's, guys. It's Chili's. That's why it's called EAT. Okay. Well, EAT is up today, guys. EAT. Let's buy some EAT and see. EAT. Let's go look at it. Let's go look at this. We can go here. Okay, let's see. Let's throw an indicator on it. We want to throw let's throw some Bollinger Bands on it. Wait, no, that's not Bollinger Bands. We don't want you. We want you. There we go. I don't know. We just close this one and close this one. And then let's throw up a MACD line. We know what a MACD line is, guys. Where is it? Where are you? I don't know. No MACD. There we go. Okay. So, look in on this one. There we go. Got a little bit of wimpity dimpity here. You can see the orange line is the MACD, guys. And it's going pop. Where's the blue and the MACD? Swapped them around. Swapped them. Oh. Okay, well, that works. So let us, we got some bouncy wouncy here, guys. This is called a continuation. You see this? If we put some lines on it, I'll show you. Where's our lines? We add a symbol. What symbol? No. Indicators? No. Where's the lines? How do you make a line? That's not it. What's this? A line. Okay, look. Here we go. I don't know. This is the MACD line. Why did it do that? We want this one up top. So, where's our line? A line. Oh, there we go. I don't know how to move these on here, guys. Sorry. Gotta practice. That line is not, it's not doing what we want, guys. It's not doing what we want at all. Align with markers. Okay, that didn't work. It didn't work at all. Not at all. My stock portfolios were $1,384. Well, okay, let us get some chilies. Brinker International. What do we want to do? It's $39. This is just today it went up like this? Not bad, not bad. What about 1 month? What's it looking like? What did it go down for? May 23rd. What happened on May 23rd that it went down? $52-week low is $21. Okay, so let us get let's get, what is it, $30? If we get 10 of them, that'd be $300. Let's do 10 so we can watch it. 10's not too many. We'll pay at market and see what we pay. If we pay $39.73, preview the order, submit it, and see if it's went through yet. So it hasn't went through yet. You can get options and shorts also, guys. So when it goes through, it will be in our portfolio. And then we will see. Let us check out Bud. Anheuser-Busch. Is it going back up, guys? I'm telling you what. People think that, I don't know. Anheuser-Busch was already down. I'm thinking that it's just correcting himself. People think that they're doing this to Anheuser-Busch, but I really think that it was just above its level because it goes up and down, guys, at different times of the year. December goes down. During the summer, it goes up. You know, during the pandemic, it went down. Bars were closed. Different times when bars aren't as, they aren't as popping. Whoa. That's just 1 year. Ah, I see. Still learning how to use Investopedia's charts. They're a little bit different. A little bit different than all the other ones. So our order still hasn't went through. It just, see, it's down here. E is pending trades. Takes kind of a long time on here to go through. It's not how it really works in the real system. Some trades go immediately through when you're buying them at market price. Anyway, guys, let's call that a day. We did some news. We did some buying. We looked at some stocks. I think that is it. We will do more on Monday when you are back. So I will see you guys Monday, same time, same place. Be there or be square, neighbors. I hope you have a great weekend. Enjoy yourself. And I will see you back on Monday. Have a great day, neighbors. Bye.